Hello, traders, and welcome back to the Forex Geek. In today's comprehensive analysis, we'll examine how momentum indicators can transform your trading approach. You'll learn about their core components, practical applications, and specific strategies that can enhance your decision making process. So, we'll start with the fundamentals of momentum analysis, move through various indicator examples, and conclude with advanced trading techniques that you can implement in your trading immediately. So by the end of this video, you will have a clear understanding of how to use momentum indicators effectively in your trading strategy. So without wasting any much of your time, let's get started. Let's begin with the basics of momentum analysis and why it matters in today's market environment. So momentum indicators are essential technical analysis tools that measure the market's speed and strength of price movements. The fundamental principle behind momentum indicators is simple. They calculate how quickly prices change over a specific time period. This calculation helps you understand whether a trend is gaining strength or losing steam. So when you see strong momentum, it typically suggests that the current trend has a significant force behind it and is likely to continue. Conversely, weak momentum can signal that a trend might be running out of steam, potentially leading to a reversal. So one key characteristic of momentum indicators is their ability to identify overbought and oversold conditions in the market. These extreme readings often precede price reversals, giving you early warning signals of potential changes. Another important aspect is divergence. When price movement doesn't match the momentum reading, this uh, these situations often provide valuable insights into possible trend reversals or continuations. So let's look at popular examples of momentum indicators. Let's start with the RSI, which we have on our screen. The RSI measures the speed and change of price movements oscillating between 0 and 100. It's particularly useful for identifying overbought and oversold conditions in the market. So typically how they use the RSI is when the RSI value rises above 70, it generally indicates overbought conditions, and when the RSI value goes below 30, it suggests oversold conditions in the market. So as you can see the RSI here signifying overbought conditions. So we should be looking for selling opportunities in the market. So the RSI just shows us the momentum in price. If you have a significant push in price, you have the reflection in the RSI also. So this helps us pinpoint where and when to enter trades. For the RSI, you can use it to spot overbought and oversold conditions. As you can see, as we had this overbought signal here, price going above 70, you can see how the RSI going above 70 rather. You can see price here giving us this swing high, forming a swing point right here as that retracing to the downside. So this is how you can use the RSI. So let me just find more examples. You have price being oversold here, so we should be looking for buying opportunities. Now we have the same thing here. You can see price, as we had that oversold signal, you can see price starting to give us reversal opportunities, so they give us reversal price action. And then we had several, after we had this oversold condition in the market, we started having several pushes to the upside before we had the final push to the upside to continue the uptrend. So this is how the RSI works. You can see this oversold, overbought condition on the RSI. You can see it reflected in price wonderfully. So that is the RSI. So the next is the MACD, which is the moving average convergence divergence. This is another example of a momentum indicator. So the MACD consists of two moving averages and a histogram. It helps identify trend direction and momentum strength. So the MACD line is the difference between a fast and slow moving average. The MACD line is the blue line right here. Now the The signal line, which is the orange line, is the moving average of the MACD line, which is the blue line. Now, these lines create signals in the market. When one goes above each other, you could have a signal to either buy or sell, depending on the one that goes above the other. For example, when the orange line, which is the signal line, goes above the MACD line, you should be expecting a bearish push to the downside. You can expect a push to the downside right here. So that is one way you can use the MACD. Now we also have the histogram. We also have the histogram. The histogram is the difference between the MACD and the signal lines. So you should observe how the MACD histogram grows as momentum increases and shrinks as it decreases. You can see here we have increasing momentum right here, have increasing rising prices, and you can see reflected on the histogram of the MACD. So when there's enough momentum in the market, the histogram grows. As momentum increases, the histogram grows. So the histogram also shrinks as momentum decreases. So crossovers between the MACD and signal lines often indicate potential trend changes. We've talked about that. You can see this example here also had this push to the downside, and you can see reflected on the histogram of the MACD, increasing histogram on the MACD. So you can use this to measure momentum in trading. So the next example is the stochastic oscillator. So let's look at the stochastic oscillator, which is this. The stochastic oscillator is an indicator that compares the closing price to its price range over a specific period. It helps identify potential reversal points. So this indicator oscillates between 0 and 100, and readings above 80 suggest overbought conditions, just like the RSI. But the RSI is readings above 70, even though you can edit it. But yeah, the standard is 70. But for the stochastic oscillator, the standard reading for overbought conditions is the 80 level, while readings below 20 on the stochastic oscillator indicates oversold conditions. So that is for the stochastic oscillator. You can see, let's quickly look at the charts. This is the daily time frame, and you can see here we had overbought condition as the stochastic oscillator went above 80 right here. So we have an overbought condition here, and you can see it reacting in price around this area. So after this, we have price pushing to the downside after we had this indication of this overbought indication as signaled by the stochastic oscillator. So we also have the overbought condition. Let me look for oversold condition. We've looked at the overbought condition. Let's look at the oversold condition. And this is one. I have one here. This is an oversold condition, and this, you can see price reacting to that oversold condition on the stochastic oscillator. So we have price giving us this push to the upside after we had this signal of an oversold condition. So that is for the stochastic oscillator. Let's look at the last momentum indicator. We'll be talking about the ADX, or the average directional index, which is this indicator you can see right here. So the ADX measures trend strength regardless of direction. So readings above 25, as you can see, the blue line right here is 25. I'm going to lock it. So this is the ADX, and the 25 line, when the readings of the ADX is above 25, it indicates a strong trend. While when it's below 25, it suggests a weak or non-existent trend. So you can see here price rising above 25 right here, and this is reflected by the rising momentum in price. So this is how you can use the ADX. When it's above 25, it signals a strong trend in the market, and when it's below 25, it signals a weak or non-existent trend, which all mirrors down to momentum trading. So let's look at how we can trade with these momentum indicators. They are quite similar, as you've seen. um some of them talks about overbought and oversold conditions in the market. So the momentum indicators, they generate clear trading signals that can guide your entry and exit decisions. So typically when for the RSI and I guess the MACD also, when price crosses above the zero line during uptrends, when the RSI, when the the RSI or the MACD, I would say the MACD, not the RSI, MACD. And okay, for the RSI, you could use the 50 line instead of the zero line, the midpoint of the reading. The RSI, the midpoint of the RSI is the 50 line, and the midpoint of the MACD is the zero line right here. And for the midpoint of the midpoint of the stochastic is the 50 line. And for the ADX, the midpoint should be okay. For the ADX, for strong trends, it should be above 25. So we'll just use that for the ADX. So for all of this, when price crosses above the midpoint during uptrends, it indicates a shift from negative to positive momentum, often signaling the start or continuation of an uptrend. For example, this is the midpoint right here, and if we see price rising from below 50 right here to above 50, it could signal the start of a bullish trend or the continuation of a bullish trend. For example, you can see price rising from, you can see the RSI rising from under 50 to above 50 right here, and you can see it reflected in price giving us this push to the upside as we crossed the 50 line on the RSI. So this can help us identify pushes to the upside or to the downside depending on the momentum or the market activity at play at that point in time. So also, if it crosses below, if price crosses below the 50 line or the midpoint, could be the zero line or the 50 line. So if price crosses below that midpoint, it could signify, it signifies a push to the downside or a downtrend starting. For example, you can see here we have the RSI, we have the RSI going below the midpoint 50 right here, and this is reflected in price. You can see price giving us this push to the downside, and it has been like that. We had a minor retracement here as reflected in the RSI also, and had the continuation push to the downside. For this continuation, you can see price returning below the midpoint and even going all the way to oversold conditions. So this signals that we should be looking for a bearish continuation or the start of a downtrend. So that is for the first signal. The second way you can use momentum indicators to trade or generate signals is if the momentum line or the momentum line, depending on your indicator, if the momentum line is going above, is breaking above previous highs. So for example, this is the RSI. I'm going to be using the RSI to explain. If we are going, if we're breaking highs or we're breaking lows, it could suggest continuation in the particular trend. For example, you can see here we have the RSI breaking below this level. So this signals that we could be looking at a continuation of the present trend. This suggests increasing bearish strength, potentially leading to new lower lows or lower prices. So this is for the RSI. The same thing happens in bullish trends. You can see here price is breaking above, you can see the RSI, breaking above this level, and the same thing is reflected in price here. So you could be looking to take buy positions around this area. So that is how you can use, that's another way you can use the momentum indicators to trade. And let's talk about one other way you can use the momentum indicators to trade. You should look for divergence from price. So when price makes lower lows, for example, let's talk about bullish divergence. When price makes lower lows, but the momentum line makes higher lows, it often precedes a bullish reversal. For a bearish divergence, when price makes higher highs but momentum makes lower highs, it often signals an impending bearish reversal. So let me look for a good example. You can see the RSI making, see the RSI here making higher lows right here, but we have price making lower lows right here. So this signals that this is a bullish divergence, and we should be looking for upward movements as indicated by the RSI or the momentum indicator. So as you can see here, this is a bullish divergence, and we should be looking for an upward push. Remember to always trade in line with the direction of the entire trend, and also from key support and resistance levels. As you can see right here, this is a key support level already, and we are having this bullish divergence. So this would have made a wonderful trade around this area. This would have made a wonderful trade, but we're not talking about that. We're focusing on the divergence. You can see clearly with the RSI making higher lows, but the price was making lower lows. So we are following the RSI, the momentum indicators, and it's showing us that buying activity is stepping in, and we should be looking to buy. And as you can see, that is reflected in price subsequently, as we had a bullish push in price action. So let's look for a bearish divergence to explain the bearish side of things. Just gonna try to spot trying to spot the bearish divergence right here. Okay, this is, I think this is one right here. Okay, that isn't. Okay, I'm just gonna skip that. This is exactly, it's just the opposite of this right here. The bearish divergence is the opposite of this bullish divergence right here, where you have price, the RSI creating lower highs, but price creating higher highs. So we should be looking for a bearish push in price. So we've made a couple of videos on the bear talking about divergence, RSI divergence. So you could just go and watch these videos which we've talked about. There are so many, we've talked about them on our channel, so you could just watch these videos, and we'll explain them better. Okay, I don't know, I think this is an example. You can see the RSI giving us bearish push, bearish price action. This is lower highs, and we have price giving us higher highs. Do you see this? This is a clear example of the bearish divergence. So it means that we should be expecting bearish price movements in subsequent price action, as the RSI has, the momentum here has indicated that we should be expecting lower or bearish momentum. This is indicated by the RSI. So we should be expecting lower prices also. So that is how the divergence works. So by recognizing all these signals, you can identify potential trade opportunities with greater accuracy. So I think that is it. Alright traders, you've come to the end of today's video. If you found this video helpful, don't forget to like and subscribe to the channel for more forex trading insights. Don't forget to turn on the notification bell to stay updated with our latest content. Happy trading and may the pips be with you. Thank you.